Now we're ready for the next panel. I'm Natalie Brunell. I host Coin Stories. I also do 90-second hot takes on financial news, if you've seen those. And I was talking earlier about how Bitcoin has so much brain power, some of the smartest people, I think, on the planet. I'm so honored to introduce this panel today. I've had the honor to interview some of them. I watch their interviews. I read their articles. So without further delay, first up, Lynn Alden. She's the founder of Lynn Alden Investment Strategy. Matthew Pine, National Security Fellow, Bitcoin Policy Institute. Welcome to the stage, Ovik Roy, President of the Foundation for Research on Equal Opportunity. And next up, Fred Thiel, Chairman and CEO, Marathon Digital Holdings. Thank you for that amazing live desk yesterday, Fred. And this amazing panel that's going to be on the unwinding of the petrodollar is going to be moderated by my colleague and friend, Stefan Livera. He is the managing director of Swan Bitcoin International and host of the Stefan Livera podcast.
And thank you, everyone, for joining us. We've got an excellent panel. Some really intelligent and great analysis has come out of our guests on the panelists today, so I'm looking forward to hearing what they've got to say as well. So we're talking about the petrodollar, and I think perhaps for me, the question that I would love to ask and understand your perspective, how do we get here? Is it down to a loss of trust, or is it perhaps a relative economic diminishing in the US economy relative to the rest of the world? What do you all think? Let's start with you, Fred.
Well, I think it's a factor of when you start weaponizing the dollar in financial systems, all of a sudden countries have to look at how they're going to hold their assets, how they're going to sell their commodities, and try and diminish risk. Because just the fact that you hold your reserves in gold, if those gold reserves are held in a bank in a country that all of a sudden is antagonistic to you, the US has now proven, and the Western powers with Russia, that nothing is off the table. If you have an asset in a country, if you're doing trade with a country, you can weaponize all of that. And that's now created a certain amount of risk around everything to do with holding assets and trading in the dollar. Doesn't mean that the dollar is necessarily going to lose its position, but its position is at risk because people need to mitigate that.
For sure. Ovik?
Well, we should remember that Russia invaded a sovereign country. That's also a breach of trust, right? So I'm not completely convinced that freezing Russian assets is going to create this complete breakdown of trust, because what Russia did was also a breakdown of the international order, right? The way I think about this whole situation, yeah, let's cheer for Ukraine, maybe, some of us. I'd break it down into 3 T's. It's trade, technology, and treasuries. So trade. You think about China, the news that Saudi is trying to maybe trade in renminbi denomination for oil. And that was very interesting to this crowd and many others, right? That's a portion of global trade. I mean, trade overall is still pretty dollar denominated, but here's the key thing. China does not want to be the global reserve currency, because if they are, they have to let the renminbi float against the dollar. If the renminbi floats instead of being pegged to the US dollar, that means it appreciates. If it appreciates, Chinese exports become more expensive and imports become cheaper, which is what the US does. The US allows its exports to be more expensive and its imports to be cheaper, which harms domestic manufacturing. China doesn't want that. So they don't want to be the global reserve currency, and that's going to put a damper on a lot of the stuff that we're talking about. The next piece is the technology. As Jack Mallers talked about yesterday, at the end of the day, if there's a merchant who's trading in euros and a buyer who's trading in dollars, it doesn't matter, because the payment rails are independent of what currency the buyer and seller want. So that gets us to the last point, and this is the part about the petrodollar that really matters, which is treasury bonds. And who owns them and who wants, what is the store of value, right? Like, if Saudi trades with China with renminbi, but then sells the renminbi to buy US treasury bonds, it effectively doesn't matter that they did the trade in renminbi. So the real question is the Chinese sovereign debt going to start competing with US Treasury bonds. That's gradually starting to happen in the sense that there's some lightening of the regulations of foreign ownership of Chinese government debt that allows it to compete with US Treasury bonds and German Bunds and Japanese sovereign debt. So that's something that's happening. Chinese are actually owning less Treasury bonds themselves, which is also very important. But at the end of the day, the Chinese debt is also growing. In 2014, the debt to GDP ratio of the government in China was 40%. Now it's 72%. So they're on the same trajectory as the US in terms of rising debts and deficits. So even if they start to take market share from the US, I think the bigger problem is that the industrialized world has unsound money. And that is the broader context for all of this.
Yeah, some very excellent comments there. Yeah, that's fantastic. Matthew, I want to hear, what do you have to add there?
Yeah, I guess I'll step back and say, look, what is the petrodollar as a monetary regime that we've been living in for 50 years or so, and what's its geopolitical context? In a sense, monetary regimes are essentially downstream of geopolitical regimes, and those are defined by state power structures, right? Who's the leading power? Who can set the rules of the road for the global order? And then whose money is seen as good? Whose money is seen as trustworthy? Whose capital markets and sovereign debts do people hold their savings in? And so these questions are essentially all downstream of where do we think the geopolitical order is going to head, and what are the potential strains and fractures in that order that could lead to a shift in a regime, right? That could undermine the structure of the current petrodollar system. And so that order, geopolitical order that generated kind of the Eurodollar system in the 50s was an order that was defined by American military hegemony, right? The rest of the world was destroyed after World War II. We were essentially the sole creditor to the global system as it was rebuilding. We could control most of the marginal pricing of commodities because we controlled most of the industrial production and most of the raw commodity imports. And that allowed us to essentially write the rules of the global order that really sustained US power through the 20th century. The key sort of friction point we ran into is because we were still essentially on essentially a quasi-gold standard, and our trading partners realized they could keep redeeming dollars to get their gold, and that broke down. Basically, started in the 60s, and it reached a crisis point that forced a new system to emerge. But we still had enough power to essentially rewrite the rules of a new system to our geopolitical advantage. And that was essentially engineered by the Treasury Secretary Simon going to Jeddah in 1973 and working out an arrangement with the Saudis and then the broader kind of OPEC countries eventually to solely denominate the sales of their oil exports in dollars. And then the key piece to OPEC's point was to recycle those surpluses back into our sovereign debt. But also into our equity, into our real estate, into our broader capital markets. And that was like sort of the beginning of this kind of recycling system that was then broadened and expanded, essentially was what drove globalization throughout the 20th century was Euro-dollar recycling. Because everything is priced in dollars, everyone has to accumulate dollars. Exporters accumulate dollar surpluses. Where do they take those surpluses? We have open capital markets. They came here. So they bought up our real estate. They invested in our equity markets. And that, was net good, you could say, over that time period. Really what shifted the sort of strategic landscape was really in 2000s, we brought in China into that system. And so it gave them, they brought into the World Trade Organization, gave them most favored nation status, and then they got brought into this recycling system. Because they're an industrial powerhouse, this is where we outsourced all of our manufacturing, and then we ran structural trade deficits in order to drive our economic growth and sort of arbitrage the labor differentials there. And so that really kind of turbocharged that system. And in 2013 was sort of the big pivot point that brings us to today, where China started to stop accumulating US treasuries. So instead of taking the dollars we gave them from running these trade deficits, buying all the goods they produce, and then having them take those dollars and recycle them into our debt, which helped us finance a lot of the wars in Afghanistan and Iraq, kind of keep our sort of military hegemony kind of financed cheaply. They took those dollars and started relending them around the world as part of the initiative called the Belt and Road Initiative. So taking the dollars and essentially weaponizing them to secure hard assets and strategic influence around the world. And they've been doing that systematically for the past 10 years. And the final point that sort of brings us to present day, situate kind of Russia in that context is, Eurasia as a landmass is sort of strategically, geographically critical to the world system. And whoever kind of can control that sort of a larger supranational entity can have an enormous influence on the global order. And the American strategic imperative post-World War II has been to prevent a single power bloc dominating Eurasia. So when the Soviets were strong, we tried to peel China off of the Soviets, which we did with the Nixon trip, to essentially keep Eurasia divided. And then when China was growing, Russia was very weak. They collapsed in the 90s. What we've seen the past 20 years, but really in the last 5 or 10 years, has been both of the key rising powers in Eurasia, Russia and China, rising together, but also politically aligned. And they just announced, about 2 months ago, a no-limit strategic partnership. And so that's, I think, the broader kind of strategic context for a Eurasian power bloc, a kind of axis of authoritarian systems that control the marginal price of goods and commodities, namely Russia, and now bringing OPEC into the alignment, and the production out of China. So that's like the current challenge to the existing petrodollar system that's kind of emerging from this context of sort of state competition.
Fantastic. A lot of excellent insights there, Matt. Lynn, I want to throw it to you now. You wrote an excellent article, very prescient and insightful article. I think it was 2 or 3 years ago, called "The Fraying of the Petrodollar." So, in your own view, how well has that thesis held up?
Well, so basically, the whole premise of that piece was that we're kind of moving towards a more decentralized reserve and payment system. And there's a number of things that kind of contribute to that. So one way to, we had excellent summaries here. And one way to take a step back is to say that this system has essentially run its course. It's not really serving anybody anymore. So the United States has had decades of structural trade deficits. Those are kind of coming back to really haunt us now. We're kind of deindustrialized. We have a deeply negative net international investment position. And the other side, because we've seen the weaponization of reserves, the weaponization of payment channels, you see other countries want to move away from the system over time and basically spread their bets out to some extent. And so when you have new technologies, new alliances, new relationships, and then you combine that with the fact that, going back to World War II, the United States was like 40% of global GDP. We were like a hyperpower. We're the biggest commodity importer by far. And over time, as you've seen kind of the resolution of that, as you've seen the rise of Asia, as you've seen kind of the recovery of the war eras, the maps become more spread out. So the United States is down to something like 20% of global GDP. We're the second biggest commodity importer. And so it's really hard to maintain that system for basically anybody, for the United States, for the rest of the world. We're essentially too small to keep our treasury as pretty much the only real reserve asset, the percentage of the market that we have. And so I think it's inevitable, due to technology, due to geographic realities, to see a broadening out of that system. And I think the key trend is whether or not policymakers want to realize it and kind of fight every step of the way against it, and therefore kind of lose out harder because of that, or if they want to see that it's happening, see that it's inevitable, and then more graciously exit from the system and kind of capitalize on the system as much as they can and kind of have that more graceful exit, which is, I think, a lot to wish for, but I think that's one of the reasons to bother talking about it and kind of understand that with technology where it is and with inflation and debt and all that where it is, that we're kind of moving towards neutral reserve assets and a multi-payment channel world. And policymakers and investors have to be mindful of this.
Yeah, and obviously this is Bitcoin 2022. I think I would be remiss not to ask if your thoughts on what role you see for Bitcoin coming out of this. So let's start with you, Fred.
So I think one of the key things is a reserve currency, if it's controlled by a country in this society or this era we're entering into with less trust, Bitcoin is not controlled by any country. Bitcoin as a currency, as a state, as a way to settle accounts between countries, can't be controlled. Nobody can affect it. Yes, you can prohibit use of it, but you can't kill it and you can't debase it. And I think Bitcoin becomes an ideal currency in a multi-currency world where you can price commodities. You can also use it as a way to store assets. And I think we will soon see countries using Bitcoin actually as a reserve asset, as a place to hold reserves. And the challenge is, what happens in a world where all of a sudden countries start putting Bitcoin on their balance sheet? It has really interesting impacts and implications. And I think as we all look at Bitcoin and where it could go, Bitcoin is going to evolve into something much bigger than I think most of us have envisioned over time. Its adoption is going to continue to creep into every aspect of trade, every aspect of commerce, finance, savings, investing, et cetera. And I think because it's a finite supply, it can only go in one direction, and at the same time, it is the most secure form of money that there is, and it is going to force people to move towards more of a hard money standard, which I think is critical for the economies and for the countries of the world.
So, Ovik, do you fundamentally agree? Do you see maybe people might be thinking in their minds, okay, Bitcoin is really volatile. Maybe it's not ready yet. How are you thinking about that?
We're conditioned, and certainly if you think about the white paper and everything else, we're conditioned in the textbook definition of money to really focus on medium of exchange. And you hear people say, well, I can't use Bitcoin to buy my Starbucks, so is it really money, right? You hear that critique, and of course that's less and less true as technology and payment rails improve. But I'm here to argue that medium of exchange doesn't matter anymore because of technology. What really matters is what can be a store of value. The US dollar is not a store of value. Even at 2% CPI inflation, in a generation, your wealth has declined by half, right? That is not a store of value by definition, and that's the Federal Reserve's official policy. The Federal Reserve's official policy is to destroy your wealth by 50% over a generation. Now, how is that a store of value? So the important thing to remember is the euro is not really a store of value either, nor is the renminbi, which is pegged to the US dollar, or the Japanese yen, right? So the entire system of fiat currencies is the problem, and I do think that we'll start to see balance sheets start to evolve. This is why the fate of the Treasury bond, the US Treasury bond market, is so important. I talk about this in this article that I know we've talked about, Stefan, called the Bitcoin and the US Fiscal Reckoning, where the point is, follow the Treasury bond market. What we're seeing now is that over the last 10, 15 years, the share of Treasury bonds owned by foreign governments and foreign investors has steadily declined, and the share owned by the Federal Reserve has steadily increased. It would not be surprising if within 10 years those curves have crossed and the Federal Reserve has become a larger holder of Treasury bonds, effectively manipulating and controlling the market. That's not sustainable. That's Latin American monetary policy. Yep. And that is the thing that's really dangerous. And I know a lot of us in this room we're waiting for that moment when, yes, Bitcoin transcends the dollar, but there is going to be an enormous amount of economic and social dislocation that we in this room, this movement, is going to have to make sure that we're doing our best to mitigate, because it's going to be a challenging period of time.
So we're in a place now where perhaps less people want to hold US treasuries. You could say there's less global bag holders. So what kind of implications will that have? What kind of role does Bitcoin play? Matt, I'd love to get your thoughts.
Yeah, I mean, I try to think about in terms of timescales and scenarios, since the moment we're living through is especially fraught. There's a lot of different ways it could evolve, and the global system, is never in a perfectly stable order. It always takes a lot of work to maintain that order, and when it starts to fray, you can get a lot of different sort of downside scenarios. And debt exposes you to fragility, and the US has an enormous amount of debt, so that makes our geopolitical position, our economic position exceptionally fragile. And the piece of the Jenga tower that's underpinning our global system is the US Treasury market. And there's a lot of signs there that it's not as healthy or safe and liquid as you would want in the global reserve savings vehicle. We've had a number of crises in the US Treasury market over the past decade. The most, I say, critical was in March 2020, where you saw essentially the Treasury market in off the runs, which are essentially freely traded in the secondary market, to basically go bidless, and the Fed had to step in and essentially guarantee it and just open up swap lines and essentially pour liquidity to keep the Treasury market functioning. And that, to me, is kind of the canary in the coal mine, right? Like the Treasury security, yes, it functions as a store of value for most, savings, both, foreign reserve managers, but also, independent retirees who want to put it what they thought was a safe asset. But also, it's funding collateral in the global euro-dollar trading market. So if you want to make a bet in in the global system, you are usually putting up treasuries as collateral. It's essentially considered a form of money. And if people don't believe that it's actually that liquid, then the global system could just come to a halt, right? The economy, that's like the nightmare scenario for the Fed, whose job it is to keep the dollar system stable. And that's just not a healthy circumstance, right? You shouldn't be in a position where you have to constantly essentially bail out the basic market upon which the global dollar system depends. So you need to find some way to transition out of that system. To everyone's point here, it's not going to be, you wouldn't think that the treasury market currently as it stands is going to be something that can power American economic growth for the next 10, 20 years, right? We have to find something different. And Bitcoin is a kind of almost like manna, right? Like we did not come up with it, but here's a novel, neutral, global reserve asset that isn't in control of any one particular power, but that individual citizens and companies have secured for their own personal interests, but that is also driving a larger economic engine of innovation that accrues to our economy, happening on its own. And you place that in the context of what our major competitors are doing around the world, is they're going back in time. They're going to gold commodity standard, which is what you do when you've got no open capital markets and you're essentially just trying to keep power. And that's the move they're going to make. They're going to go they're going to try to push the world towards a gold commodity-backed standard, essentially, some hybrid mix of those things. And here's Bitcoin essentially as a strategic asset, a sort of ace in the hole for the West, if we can sort of take advantage of it, to leverage the fact that we have this neutral reserve asset that can help essentially rebalance our books, right? Essentially, as Bitcoin monetizes, it helps essentially restore our fiscal balance sheet, sort of as a nation. And if you go back to the petrodollar, to monetize the petro side of the petrodollar, oil had to quadruple in price, and that had major consequences for the world, right? When your energy input costs go up, the world suffers. And so that was the deal that Kissinger made, was okay, this is the cost to reset the system, had enormous negative externalities to monetize into a new regime. And here's Bitcoin doing on its own, and it's actually going to have positive externalities. It's going to have economic innovation associated with its monetization that's actually doesn't hurt the developing world like commodity inflation would. If you try to monetize commodities, you don't want to have wheat be a store of value. You don't want to have oil be a store of value. People need those to survive. You don't want your house to be a store of value. You just want it to be a good place to live. Here's Bitcoin. It's literally custom made to be a store of value, and it's perfectly aligned with our American values. So it's kind of an obvious thing to sort of use Bitcoin to your own advantage and have it be a sort of a way to counterbalance our adversaries, but do it in a way that's consistent with our value system.
So Lynn, what role do you see Bitcoin playing, and what kind of shifts do you see coming?
So I think part of understanding how we got to this situation with the petrodollar system and the eurodollar system comes down to understanding what are the properties of good money. And so prior to the system, there was gold, and it checked a lot of boxes for good money. It was scarce and had all the properties that many people here know, but it had weaknesses in terms of portability and auditability, verification, those types of shortcomings. And so despite the fact that it was good at holding its value long term, the fiat system could grow around it for out of convenience, right? And so it's easy to centralize and easy to introduce through military force and diplomatic deals, fiat currencies that can go around it. But even that system, for decades now, the problem there is that you also lack good verification. So a common problem throughout the whole euro-dollar, petrodollar market is that it's very hard to track offshore dollars. They're very opaque. And so because this is not a very auditable system, it's shortcomings with the money itself. And then in addition, because the money constantly devalues, there's a very strong incentive to take out debt on it and then use that as leverage. And so you have a system that's not auditable or not very auditable and then encourages more and more debt accumulation. And so we find ourselves in the situation that we're at now. And so Bitcoin represents, a hope that there's maybe is a money that is good enough, that basically it checks more of the boxes that gold was not fully able to check. So you have the same type of scarcity, but then you also have better portability, better divisibility, better verification. And we're 13 years into this monetization process. And one of the most bullish things about Bitcoin is that there are pools of capital that can't even realistically buy it until it gets bigger. And that was the case 5 years ago, corporations, pensions, insurance companies, Bitcoin was too small, too volatile, too risky for them to even really look at. But when it becomes a multi-$100 billion asset, suddenly those large pools of capital can just start looking at it and say, do we want 1% positions? Do we want 5% positions in it out of our portfolio? And when you get even bigger than we are now, right, then you can start looking at the sovereign level. And they can start looking at it as a reserve asset and see how it compares to their other ones. How does it compare in terms of their ability to self-custody it? It's got, censorship-resistant payment rails built into it, in addition to, in the long run, better scarcity than gold. And so if it continues to grow into that and keeps having that Lindy effect build up, I don't see why it wouldn't eventually be part of a number of countries' reserve assets.
I want to amplify that point real quick.
Yeah, for sure. Go on.
The price of Bitcoin relative to the US dollar really does matter. And the reason why it matters is because let's say the market value of all the Bitcoin in the world is 10 trillion instead of 1 trillion, plus or minus. That's when you start to have a situation where the liquidity of Bitcoin for large institutions, for governments, for Deutsche Bank, for a country, they can start to buy and sell Bitcoin at scale in a way that's competitive with the way that today they can buy and sell treasury bonds at scale. And what do I mean by that? That means if I want to buy $300 million of Bitcoin, I can do so without affecting the market price, right? That's what liquidity is. And the ability to do that at scale improves as the value of Bitcoin improves. So it becomes this virtuous cycle where if some countries start to adopt Bitcoin as part of their balance sheet, the price of Bitcoin goes up. That means the liquidity goes up. That means more governments can use it as a reserve asset on their balance sheet, and it's a virtuous cycle. So that is a really important part of the evolution of this market.
But I think the other fact that's important to realize is because the supply is finite, unlike public companies who, while the value of their stock goes up, issue more stock to raise more capital, you can't do that with Bitcoin.
Right.
Nobody can do that. And the fact of the matter is, over time, more and more Bitcoin will be sidelined in reserves. And so now you have a whole other economy of monetizing these captive Bitcoin reserves and remonetizing them, which is going to build a whole new set of financial instruments.
And that's how you start to displace a dollar as a vehicle for credit.
Exactly.
We're not there yet. One point to make about the petrodollar, too, is the petrodollar agreement, the famous deal with Nixon and the Saudis in 1975, that came on the heels of us, the United States, leaving the Bretton Woods agreement in 1971, right? That's why he did it. And part of the agreement was that Saudis would buy treasury bonds at a preferential rate, right? So, but think about this. What was the federal debt back in 1975 compared to the size of the global petrochemical market? Compared to now, right? The federal debt has exploded. The Fed's balance sheet has exploded. The oil and gas market has grown, but not to the same degree. So I would argue that the financialization of the global economy makes what's kind of at a micro level happening with the specific exchange of oil and currencies relatively less important. It's still important, but relatively less important compared to some of these other things that we've been talking about.
Yeah. The one other point I was going to add to the making a lot of comparisons, conceiving of Bitcoin as a novel reserve asset, and the relevant historical and current analogies is gold and treasury securities. But it has a very fundamental, unique property, which is that individuals can hold it, and they can hold it at almost any size.
Yeah.
So, which is not the case with treasury bonds. To buy a treasury bond, I don't know how many people in this room even know that they may hold a treasury bond, but it's an obscure thing that maybe is a part of their Schwab account, but it's mostly held by institutions and countries. So when you have a system where the dominant reserve asset can really only be held by major pools of capital and nations, that sort of structures the power system in that direction, centralizes it. Same thing with gold, right? You have to have centralized custodians and then have all the protection and then essentially the seigniorage benefit from being able to issue paper claims on that. So that typically is how gold standards fail. Bitcoin is fundamentally different because it's a digital bearer instrument that can be held on a cell phone, so you can have reserve asset for the people. And you can have developing markets that don't have to rely on a central government to be, say, fiscally sound or sort of be forward-thinking to adopt the Bitcoin standard. They can just do it on their own. And so that's something you didn't have before historically. That's now enabled by technology. And I don't think we know exactly what the implications of that are going to be in terms of the knock-on second-order effects to those political systems as individuals in those different countries adopt their own vision of what a future reserve asset should be for themselves. It can hold as little as a few dollars on their phone, and I think we need to think about the longer term implications of that, in addition to the sort of the global kind of state to state interaction.
Yeah, I love that point about Bitcoin, the reserve asset for the people. Lynn, I want to throw it to you. You have spoken a little bit about the way the economy has shifted, and so let's say we're seeing a relative decline in the petrodollar. What kind of economic shifts do you think we will see, perhaps in the US economy and the economy abroad?
Well, the upside of the arrangement is that the United States is potentially able to reshore some percentage of what they've offshored, right? So the US has had to become structurally uncompetitive in terms of physical exports in order to export a number of dollars to support the petrodollar system. And if that starts to unwind, that gives the US a chance to close its trade balance, which is one of those things that's very uncomfortable when it happens usually. It usually comes with currency devaluation, inflation, things like that. But on the other side of it, when you're on, when people can hold good money, when you can have this situation where you can actually make things at home because you're kind of you're pricing things in a global standard rather than having your currency be the heart of everything, that's the upside of the system. The downside of the system is that, we kind of all suffer from recency bias, or a lot of analysts suffer from recency bias, where we go through like a 10-year period and we think that that's how things are now, and then we're always blindsided by the next 10 years. And so, especially commodity cycles go through these big, capex cycles where they're oversupplied, and then they're undersupplied, and then they're oversupplied, and these tend to be these 10, 15-year cycles. And this whole past decade and a half has been this period of structural commodity oversupply, at least for most commodities. And I think what we're entering is a period of more commodity scarcity, more commodity uncertainty, combined with that kind of breakdown of the global order. And so it's much harder to maintain the current system as it was in a more inherently disinflationary regime. And so I think that we're kind of going through this period where having your own kind of self-custodied money, including one that can be then sent in a censorship, it's hard to stop the payments, censorship-resistant way, is something that both on the personal level and on the corporate level and on the sovereign level is useful. And that's why the quote-unquote total addressable market of the Bitcoin network is huge, because you're not just going after the gold market, you're also going after the payment rails, and you're also going after even some part of the fact that we've monetized so many other assets. And so I think one of the things to realize is that if Bitcoin gets bigger, that can take a chunk out of other assets, at least in terms of inflation-adjusted forward returns. And I think it's one of those things why I start to view Bitcoin as something that even though it's volatile, having some of it is insurance. It's insurance. Even if someone's skeptical about it, you want to hedge the fact that maybe it takes off more than you think. And if your other things kind of get partially demonetized, you have that access to it. So I think there's going to be a lot of winners and losers in that transition. And it's not going to be pleasant. It's going to be messy. But the world can kind of rebalance after kind of these decades of always kind of tilting to one side, where the U.S. is running bigger and bigger deficits, the rest of the world is running surpluses, but then they have their own issues. And you have this kind of it's constant devaluation of currencies, people unable to access good money, especially in emerging markets. And this potentially can address so many of those things. And it's one of those, I think every couple years, we kind of can even see further out of what it can look like. I think it's one of those things where we may overestimate what can happen in 1 year, but then underestimate what can happen in 5, 10, 15 years, because it's kind of an exponential set of changes that can occur if this monetization process stays on track.
Excellent. So we've only got a few minutes left, so probably, yeah. So, as you mentioned, it's going to be messy. The elephant in the room also is inflation. So, what kind of impacts are we going to see with what's going on the petrodollar? What impact is that going to have on the quality of life? Maybe just a minute or two each. Fred?
I think we have yet to see the real type of inflation that we're going to see when there's a food crisis, because fertilizer costs are going way up, because a quarter of the world's wheat supply is located or created by two countries who are at war with each other. Energy costs, we're early on in this game, and there are things that are going to move through our economy that are going to create fairly large dislocation, and unfortunately it's going to create a lot of social issues. And I think what people have to be prepared for is the fact that hard assets will retain their value. Goods, commodities are going to go way up in price. And wage inflation won't keep up with it at all. And I think we all need to be prepared for a period of considerable concern here for the economy and for jobs, where right now there's this excess demand that we're kind of fulfilling. It's hard to fill jobs. Unemployment is decreasing. We're going to hit a point where all of a sudden that reverses. And that's coming very quickly. And I just think we need to be prepared for that. Yeah.
First of all, but to answer the question, I want all of you to give yourselves a round of applause. Can we do that? The reason why I say that is because the most important thing we can do to avoid or mitigate the social problems, the very serious social problems that you just described, Fred, is for as many people as possible to own Bitcoin. And that is the work that all of you are doing, whether you're working for a company that's trying to make Bitcoin easier to use and more accessible, or you're orange pilling your friends. That is the thing that we all have to do so that as many people as possible in this country and around the world can avoid the effects of inflation, because it's going to get worse, not better. As many of you understand, the official inflation statistics are understating the problem. The cost of housing, the cost of healthcare, the cost of higher education, a lot of the things that my think tank works on, trying to mitigate at the microeconomic level, inflation is going to really swamp that, and it's going to be really hard. And we all have to do as much work as possible to get as many people as possible to own Bitcoin.
Here. Yes, I think we're in for just a generally inflationary decade, both because of these unanticipated shocks, like the Russia-Ukraine invasion, which has taken off a huge chunk of the commodity and energy supply from the market, which is just going to lead to kind of a stochastic sort of increase in the price level for those commodities. But I think what that now is also going to precipitate is a geopolitical reordering, kind of a reversal of globalization. For the past several decades, companies have just gone out into the world and set up operations overseas, and sort of seen an office in Shanghai, an office in Moscow, and an office in Sacramento as essentially just different dots on the map. Now those are fundamentally different, and they have to be reconceived in terms of the geopolitical risk associated with that. And so that means, and that's now going to be sort of state incentivized to bring those things home. And that's inherently inflationary. Like reshoring production, while good in net, is going to be inflationary. So you're both going to have these commodity shocks that are going to be sort of help to re-anchor inflation expectations probably higher than the Fed's target. But then you're going to have just like a persistent structural trend as the world deglobalizes to a certain extent. I don't think we're going to go entirely to a full form of autarky, like Russia sort of being forced into to a certain extent. But that's kind of the trend, sort of away from globalization, and that's going to take a lot to work out, and it's going to be expensive, and it just means everything is going to be going to take a lot more money to sort of finance, and that's going to make the cost of financing go up. And we have so much debt in the Western system that to a certain extent, like policymakers, while they won't say it overtly, they need high inflation. They need this debt burden to go away. And now they don't want runaway inflation. They don't want the collapse of the currency, but they can't have deflation at all. So net, they would like to have kind of financial repression, where you keep yields low and you let inflation run hot. You do that for several years, and you try to rebalance your debt ratios. That's like a Goldilocks sort of very narrow path. It's difficult to tread, and when there's geopolitical shocks, threatens to push you off that narrow ledge. And that's kind of the period we're in. Is that can the policymakers kind of keep their financial repression track going, or is a shock going to knock them one way or the other? Remains to be seen.
Sure. Lynn, you've got the last word.
Yeah, so we're running a long time here. But one thing I'll point out is that just in history, commodity cycles have so much influence over human well-being and human flourishing. And basically, in kind of a commodity-abundant environment, that's when people do very well. And when commodities get scarcer, that's when it's hard. And because of investment cycles and because of what we're seeing in monetary policy around the world and fiscal policy, we kind of have a number of imbalances here. And there's no smooth way through it. So the best people can do is protect themselves by understanding as much as they can what's happening in the world, and then owning what they view as scarce assets. And so I think that that's going to be a test going forward, and it's going to be a very challenging environment. But hopefully, at the long end of it, after you get through that environment, you turn the next chapter and things turn up. So hopefully the people here can make that happen.
Excellent. So that's all we've got time for. Everyone, please put your hands together for our fantastic panelists, Fred, Ovik, Matt, and Lynn. Thank you.